You ever look at a stock chart and just see noise? A total mess of lines and bars that don't seem to mean anything. Well, what if I told you there's a simple story being told in there and you just need to learn the language? Today, we're going to do exactly that. We're cutting through all the clutter to give you one simple, powerful strategy. And let's be honest, it's a fair question. Sometimes it really feels like they are, right? Maybe it's to make Wall Street analysts seem smarter than they are, or maybe people just love to overcomplicate things. But the truth is, you don't need a PhD to figure this stuff out. Not even close. So that's exactly what we're going to do here. We are going to simplify it way down. We're going to ignore like 99% of the technical jargon out there and focus on just two key patterns. That's it. This is all you'll need to start reading what the market is actually trying to tell you. All right, so here's the game plan. First, we'll decode what a chart even is. Then we'll get into the basic building blocks, candlesticks. After that, we'll talk about momentum, using those candles and something called volume. Then I'll show you our secret weapon, the 50-day moving average. We'll put it all together to see it in action and then wrap up with the key things you need to remember. Okay, let's not waste any time. Section 1, decoding complicated charts. We're starting at square one. First things first, the time frame. You can look at charts by the minute, the hour, the week. It can get crazy. But for our strategy, we're going to keep it simple and powerful. We're only looking at the daily chart. That just means every single one of those little bars or candles you see, that's one day of trading. Simple as that. Which, brings us right to those candles. So for section 2, let's figure out what these things actually are. Think of them as the alphabet of a stock chart. Once you can read them, you can start forming words. This is way easier than it looks, I promise. Green just means the price ended the day higher than where it started. So it opened at the bottom of that fat part and closed at the top. Red is just the opposite. The price went down. It opened at the top and closed lower. And those little thin lines sticking out, the wicks, that's just the highest and lowest points the price hit during the day. That's all there is to it. All right, so reading one candle is easy. But the real story, the good stuff, is what happens when you see a bunch of them in a row. So that brings us to section 3, where we talk about momentum and how we use candles and volume to see it. So imagine you're looking at a chart. Day 1, you see a little green candle. Okay, cool. Day 2, a bigger green candle appears. Interesting. The buyers are getting a bit more confident. Then on day 3, bam, you get a really tall green candle. What's that telling you? It's shouting that the positive momentum is building day after day. The rally is getting stronger. But how do you know if this is a real move or just a fake out? How can you be sure? Well, that's where our second piece of the puzzle comes in. You always have to remember this. Volume confirms the story that the candles are telling. It's like the fact checker. See those bars at the bottom of the chart? That's volume. It shows you how many shares were traded. So on day 1, when we had our small green candle, volume was okay. Day 2, bigger candle, and look, the volume bar is bigger too. Day 3, our huge candle, and the volume bar is the biggest yet. This is huge. It means more and more people are participating in the rally. It tells us the trend is the real deal. And now, it's time for the secret sauce. The one simple line that puts everything we just talked about into context. Welcome to section 4, the 50-day moving average. Okay, 50-day moving average sounds super technical, but it's not. All it is a smooth line that shows the average price of a stock over the last 50 trading days. You don't need to calculate it, the chart does it for you. Its only job is to help us see the overall trend at a glance. And here's how we use it. It's so simple. When the stock's price is trading above that line, we're in bullish territory. The overall vibe is positive. It means the stock is doing better than its recent 50-day average. That's a check in the good column. And on the flip side, when the price falls below that 50-day line, well, now we're in bearish territory. The sentiment is more pessimistic, kind of glum. The stock is underperforming its recent average. So just think of this line as a simple separator between the market's good moods and bad moods. Okay, we have all our pieces on the board. We've got the candles telling us the daily story, we've got volume to confirm if that story is true, and we have the 50-day moving average to tell us the overall trend. Now, in section 5, let's finally put it all together and see this strategy in action. So here it is, setup number 1, the bullish buy signal. You're looking for 3 things to happen. First,
the price pops up and breaks above that 50-day moving average line. Second, you're seeing big, healthy green candles, showing real momentum. And third, you glance down and see that the volume is high and getting higher. That confirms the move. When all three of those things line up, that's a beautiful, strong signal.
And the best part? The sell signal is just the exact opposite, which makes it incredibly easy to remember. First, the price breaks down below the 50-day moving average. Second, you see a big, fat red candle showing that sellers are rushing for the exits. And third, you see high volume, which confirms that a lot of people are selling. It's the same logic, just flipped on its head. And believe it or not, that's basically it. That's the entire strategy. You now have a simple but incredibly effective framework that traders all over the world use. So let's lock it in with our final recap in Section 6, your key takeaways. Here's your final cheat sheet, the stuff you really need to remember. One candle is one day. Green is good, red is bad. Taller candles mean stronger momentum. High volume is your confirmation. And the big one, above the 50-day line is bullish territory. Below it is bearish territory. That's the whole game right there. So there you have it. We stripped away all the confusing junk and focused only on what actually works. The next time you pull up a stock chart, it's not going to be a mystery anymore. You have the tools, you know the language, you can read the story. So the only question left is, what story is that next chart going to tell you?